What's up, my future one percenters? This is the TraderChamp Cam Jones, the prince of the stock market. This channel is brought to you by TraderChamp, an app where you can build a one-day portfolio and challenge traders from all over the world to see who is the trader champ. If you don't want to download the app, you can visit the website at traderchamp.cash, and you can play the game there the same as you would inside the app. I want to start off by saying I am not a professional trader, and everything on this channel is strictly my opinion. I'm not telling you to do what I do. I'm just telling you what I'm doing. So with that being said, let's get into the video. And today we're talking about something that I'm really passionate about. So I might sound a little bit different. I might be a little bit overhyped, a little bit. I'm talking about what's a deal and what's not a deal, because a lot of people, you'll hear them say like, hey, I bought this stock for $2. And we talked about this a little bit in the last video. I told you I was going to be talking about this. I bought this stock for $2. I bought this stock for $10. And, but they don't really understand what they're buying. They don't even know what they're buying. They don't know the value of the company. So let me give you some examples. I'm going to give you two bad examples and one good example, because I'm going to try not to go off on a tangent and make this video really long. So an example of something that people might think is a deal, but it's not, in my opinion, and that is Lucid. So let's take a look at Lucid. Lucid stock is, hold on, I'm going to switch to share my screen, and we're going to look at Yahoo Finance. I don't know if I'll be pulling up my Thinkorswim chart because we're not really looking at anything like, price points or support and resistance or nothing like that. But I might pull it up. I don't know. So this is Yahoo Finance, and we can just use this to look at market cap and things like that. So what is market cap first? First, let's get to Lucid. Well, I know the ticker symbol. It's LCID, Lucid. So what is market cap? Market cap is just a fancy way of telling someone what something is worth. So I always use the example of like different products around your house. So if you bought an iPhone 16, I think the entry level was like $999. Who cares what the price was? It's just an example. Let's say the price was $999. The market cap of that phone is $999. Let's say you bought a pair of Jordans. They usually retail for about $220. The market cap of those shoes is $220. So market cap just means how much something is worth in terms of stock, how much the company is worth overall, not the stock price, how much the company is worth overall. And that is determined by shares outstanding. So what you do is you determine how much you can find out how many shares outstanding a company has. Let's see here. I think we go to statistics, at least for market cap. I don't know if this is going to tell me shares outstanding. I probably should have looked at this. Yeah, here it is. So, damn, they got 3 billion shares outstanding. They tripping. Oh, man. Okay. All right, so look. You multiply the stock price by the shares outstanding. That's how you get the market cap. But you don't really have to do all that because everywhere just gives you the market cap. But I'm just telling you how you reach that point. So 8.4, the market cap of Lucid is $8.4 billion. So Lucid as a company is worth $8.4 billion. So far, a lot of you are probably like, okay, I don't really understand what you're talking about, or I don't really care that it's worth $8.4 billion. Well, I'm going to tell you why you should care. Let's take a look at, and just look at the stock price. We're talking, because most people will say, hey, I bought Lucid for $2.79. They're going to be the next Tesla. Lucid is an electric car company. They're going to be the next Tesla. Blah, 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 blah. Okay, well, let's take a look at this. Lucid in 2023 delivered 6,000 cars. That's it. They delivered 6,000 cars in 2023. Now let's compare that to Tesla. We don't know Lucid's 2024 delivery numbers yet. It hasn't come out. Tesla, we know because I think they reported their numbers in December, I think. But they delivered almost 1.8 million cars in a year. So Lucid sold 1/300th of what Tesla sold, and its market cap is $8.4 billion. I think that's a problem. Another problem that I see with companies is if we go back down here to shares outstanding, 3 billion shares outstanding for a company as new as Lucid is crazy. That's too many shares outstanding. And when you have too many shares outstanding, that means you trying to I feel like I can't think of like a good word to say that's not really offensive because I'm starting to get hype. But you trying to do something that it's not illegal, but you trying to like rip people off with 3 billion shares outstanding. That's too many shares outstanding. Oh, my bad. I'm highlighting the imply. I guess it's both the same. That's too many shares outstanding. If you look at let's go to Tesla, right? Let's go to Tesla. And let's take a look at their shares outstanding. And I know what you're going to say. Tesla's $406. Remember, the stock price doesn't mean too much, but their market cap is $1.3 trillion. That's a lot. So let's take a look at, my bad, we're going to go to statistics. How many shares outstanding do they have? They have 3.2 billion shares outstanding. Now, I know what you're thinking. Yo, you just was clowning Lucid for having over 3 billion shares outstanding, but Tesla has 3 billion shares outstanding. Well, you know how Tesla got to that point? Tesla did a bunch of stock splits. I don't even know. Let me see if I can find out how many stock splits Tesla has done since they've been a stock. Because that will put this in perspective. And I think they've done more than 3. August 31st, 2020, they did a 5-for-1 stock split. August 25th, 2022, 3-for-1 stock split. I think they've done one more. Let's see here. I'm trying to find this out real quick. Because I think that they did a big one, like a 20-for-1 or something like that. No, it looks like just a 5-for-1 and a 3-for-1 stock split. But they got to that point by doing stock splits. They did not just automatically issue a ton of shares to just flood the market with a bunch of shares. So that's how Tesla got to that point. And we could go to another one we talked about in the last video, Apple. Let's look and see how many shares outstanding they have. Go to statistics. And you can find out shares outstanding and stuff from, Charles Schwab and things like that. I'm just using I'm just using Yahoo Finance here. But they have 15 billion shares outstanding. And they got there by Apple has done a lot of stock splits. They've done 10-for-1s. I'm trying to find this out real quick for you. I'll tell you how many Apple has done. So, this goes back to 1987. They did a 2-for-1 stock split In 2000, they did a 2-for-1 stock split. 2005, another 2-for-1. 2014, 7-for-1. That's the one that I thought was a 10, but it was 7-for-1. 2020, they did a 4-for-1 stock split. So they got to that point by doing stock splits. And then also, these are companies, Tesla and Apple, that sell a legitimate amount, that sell a lot of product. So it's justified. It's not justified for somebody like Lucid to have 3 billion shares outstanding. They're a brand new company. I mean, they're not super brand new, but in compared to like Apple, Tesla has been out, I think, since 2008. Lucid, I think Lucid came out in like 16, 17. But they're not. They came out in 16, so they are 9 years old. So they have too many shares outstanding. So if somebody's buying Lucid and they're like, yo, I only paid $2 for Lucid, yo, you're buying a company that that's only selling 6,000 cars. These people could go out of business at any time. 6,000 cars? And then not to mention their technology isn't up to the same, it's not up to par with Tesla. Tesla's aiming for level 5 autonomy with cars. Lucid, they're aiming for level 2. They're aiming for level 2. Tesla's at level 2, but aiming for 5, which means that Lucid, they're not going to do anything else as far as the technology goes. They hit their goal. They wanted level 2. They've got level 2. Tesla's aiming for level 5. Now, let's go to one more that I think is just a trash stock. I've made some money on this before, though, because you can make money on a terrible stock and you can also lose money on a good stock. So don't let somebody tell you. I hear a lot of people, they'll say, oh, let me show you the right way to trade. There's no right or wrong way to trade. Well, actually, there is. The right way to trade is when you profit. The wrong way to trade is when you lose money. I don't care what stock you buy. You can buy this one, Zomedica. Trash. Absolutely terrible. How many shares outstanding? And they do something with they're basically like a veterinarian service or something like that. Something with like animals or something like that. Their market cap is 121 million. Now that's pretty small, but look at this. Look at how many shares. They've got almost 1 billion shares outstanding, and they're 12 cents. Almost 1 billion shares outstanding. That's way too many shares outstanding for your company to be 12 cents. That's because this company is always issuing new shares, flooding the market with brand new shares and diluting the stock. That's one way that, these companies bring down the stock price. So let me give you an example, right? This company, let's say the shares outstanding is, let's just say you have a $10 bill, right? That one bill, you only have one bill. That one bill is worth $10. Let's say you go to a cashier and you say, let me get change for this $10 bill. They give you 10 ones. So they took your one bill and gave you 10 new bills. Well, you still only have $10. It's just each bill, instead of the one bill worth $10, now one bill is only worth $1. So they flood the market with new shares. It dilutes the stock. So you may have bought the stock at 50 cents. They do they call it an offering, a share offering, and they flood the market with new shares, and it dilutes the share price. So now you bought it at 50 cents, but they put out 3 million new shares. Now the stock is worth 12 cents here or whatever, because just because you make change for a $10 bill doesn't mean you have more than $10. Just because you issue new shares and you add it to your share outstanding, it doesn't make your company worth anymore. Your company's still worth the same amount. They just gave you more shares, which make your shares worth even less. That's what companies like this do. And somebody who buys this at 12 cents, like, yo, I bought this at 12 cents. This is a deal. No, it's not a deal. This is trash. Let me give you an example of a company that I think is a deal. And we talking about Netflix. So if you go to somebody and you say, yo, you got to buy Netflix, man. Netflix. And somebody looks at the stock price, yo, it's $977. Well, let's take a look at let's take a look at Netflix, at the numbers. If you look at their market cap, which what do we say market cap was? All it means is how much the company is worth. The market cap is $417 billion. It's under $500 billion. Now you might be like, yo, that's a lot. You were just talking about companies worth $8 billion and stuff like that, saying it's not. Let's take a look at Netflix numbers. They just reported earnings today. While I'm recording this, today is January 25th. I think they reported earnings like on the 22nd or something, whatever it was. It was last week. Who cares? We got the numbers. They have 3 million total subscribers. They just raised the price of Netflix by $1 for the lower tier and $2 for the higher tier. Let's just take the $1 increase, right? That's automatically an extra $300 million for no reason, because nobody's getting rid of Netflix. There's some of you out there that your water will get cut off and you'll still find a way. You'll find a way to pay for Netflix over the water bill. No matter how much Netflix raises the price, people will just complain, but they're not going to get rid of it. So that's just a free $300 million that they want to get, when this price increase hits. Also, look at the room for growth for Netflix. They have over 300, I think it's like 301 million subscribers, something like that. Just to keep it simple, we just going to call it 300 million. There's over 8 billion people in the world. I think that at some point they can get to 1 billion subscribers. You see that growth there? And I'm not saying they're going to get to 1 billion subscribers in July 2025. That ain't happening. But if you look over time, they're going to do nothing but increase subscribers. That's it. That's all they're going to increase their subscribers every year. It's going to continue to increase. And they're going to get to 1 billion subscribers at some point. Do I know when? I don't. But I don't think it's going to take them, 15 years. I think it'll be under 10 years for them to get to 1 billion subscribers. I wouldn't be surprised if they did it in 5. So, and then let's just take at another area for growth for them, video games. We aren't even talking about that yet. Now, I'm just speculating right here, but I think Netflix will come out with some type of video game streaming service that'll be a separate fee from their movie service. It'll be a separate fee, and they'll get people that way also. Are they going to get 300 million subscribers? No. But can they get 20 to 50 million? I think that they can. And that's just added value to Netflix. So if you look at their market cap right here, 417 billion, I'll just mention that under 500 billion. I think I said 417 million. I meant to say 417 billion, their market cap, but I'm going to keep mentioning it's under 500 billion. I think they can get to 500 billion. They're worth 500 billion easily. Let's look at their shares outstanding. They only have 427 million shares outstanding. I can see them doing another stock split here within the year. Um, so, and that's stock splits are positive in general. In general, stock splits are positive for the stocks. So, I think that if you factor in their current subscribers and their room for growth as far as like reaching a total amount of people and new revenue streams that they can tap into, such as video games, I think this is easily a $1 trillion stock. This is going to be one of the next $1 trillion companies really soon. And if you think about it, this is 400 billion. To get to a trillion, that's over 50%, which means you have over 50% upside here, which would bring it to about, let's just call it $2,000 a share. I think this is a deal. But if you tell somebody y'all bought Netflix for $977 and then you tell that person Lucid is $2.79, they'll think Lucid is the deal because all they think about is the share price. They don't think about the market cap and what relates to the market cap as far as like, sales and room for growth and things like that. So, I think I'm going to stop it right there. I think that I gave you enough information. I hope that it was clear and simple. I hope I didn't go off into too many tangents, but this is something that like, it just amazes me when I hear people talk about stocks, even people that are considered professionals, and they don't mention like, the market cap compared to other companies, or if the market not even compared to other companies, just if it's just out of whack, period. Like Zomedica or whatever that company was, and Lucid's just all out of whack. You're not an $8 billion company selling 6,000 cars. Just not possible. Now I will say this, and I'm going to tell a story about Tesla. I'm not going to be giving my opinion or teaching anything or whatever from here on out. So if you want to cut this video off, go ahead and cut it off, because I'm doing story time right now. But let me put the camera on myself for this one, man. So this was, I think it was 2011. I went to work. And if you know anything about me, you know I hate pumping gas. You know what's worse than pumping gas? Pumping gas in the cold. I hate it. And I think I had to fill up my car in the winter time. And I went to work and I was complaining, like, man, I had to pump gas. Where I don't know what I was saying. And then this dude was like, man, you know what you need? You need a Tesla. And I'm like, what's that? Obviously. And he told me it was an electric car. So I went and I did some research on it. I was like, yo, I went back to him. I was like, yo, man, this car gets, at the time, I think it was getting like 210 miles on a Model S. I'm like, yo, this gets 210 miles. I do need that. And obviously it was like, at the time, I think it was like 90,000 or something like that. I'm like, man, I can't afford this. But, I could probably afford the stock. I'll buy the stock. So I went and I looked up the stock at the time, and we're not talking about any splits. We talked about some of the splits that Tesla did. So when I give you this price, if you look up back in time, this stock price, it's not going to be the same because I'm not taking into account the stock splits. So if you get in the comments like, man, no, it wasn't. It was $2 back then. That's because it's taking into account stock splits. But at this time, there were no stock splits. Not for Tesla, at least. So I went and looked at the price. The price was like $30 a share. And I'm like, oh, okay, I'm going to buy this. So I looked into it a little more. How many cars are you selling per year? And at the time, they were selling like 1,000 cars a year or something like that. I was like, man, there ain't no way I'm buying this stock. I was basically doing the same thing I was doing with Lucid, but they had a lot less shares outstanding. And they had a lot more room to grow. They're the only electric car company at the time. Right now, there's a few of them that Lucid has to compete with. But $30 a share, only selling like 1,000 cars. I'm like, nope, not buying it. Well, I look back like 2 months later, it was at like $60. So a double. I'm like, oh, okay. And I still didn't buy it. And you wait like a year it was at like $110. Then it was at like $200. Next thing you know, it's at like $1,000 in like 3 years from that 2011 point. And I'm like, dang, I missed it because I didn't believe in the company because I only looked at the sales. I wasn't looking at like the room for growth. And I missed out on the super early days of Tesla. And story time's not over. It made me think of another story and this is kind of like goes to not being a follower with other people. And let me once I get to the story, I'll explain. This same guy that told me about Tesla, another time we had like a birthday party at work, and we all like went to this restaurant, and when we were waiting on our food, the same guy who told me about Tesla, he was like, man, this was 2011 again. He said, man, we should all put our money together and buy this thing called Bitcoin. So everybody's like, all right, what's that? Everybody was interested in like, what's Bitcoin? Now, he could have done a better job explaining what this was, but I feel him. This was what it was used for at the time. He said, oh, it's a way that drug dealers like pay other drug dealers or something like that. It was something illegal. And then everybody at the table just started laughing and clowning them about it and stuff. I was interested. I'm not going to sit here and say, oh man, I was going to buy it because I don't know, but I was interested. But I was following the crowd. So everybody else was laughing, so I joined in and I was laughing with them. And everybody's like, man, I ain't buying this. Now at the time, Bitcoin was at like $7. It was like $5 to $7. Y'all know where it's at now. At the time of this recording, it's like $105,000 a coin. So when somebody tells me about a stock or something, I never kind of like write it off because I always think about the Bitcoin situation, and I even think about Tesla a little bit. So I always kind of look into it. And most of the time when somebody tells me about something, if it sounds legitimate, it depends on the stock price. I might buy like 25 shares or something and see how it acts over the next week or something. I can always sell it if I lose 3% or something like that. I don't know, like, all right, it was a bad decision or whatever. But it made me not want to follow what everybody else thinks is good or bad, but do my own research. And that's what I advise everybody else to do. Do your own research on stuff and see if you like something or not, because there's some opportunities out there that you could really be missing because the majority of people that you're with or the majority of people that you're listening to doesn't like something, and it might be because they don't really understand it, or maybe they're just not a futuristic forward thinker like that. They just can't see the potential in something. So I think I'm gonna leave it there, and you know what, on the next video I just talked about seeing the potential in something. I think I'm gonna talk about a stock sector that I really see potential in, and I'll also kind of give a little background on like some of the stocks that I've picked before on my old podcast that I kind of saw a future with and it shot up. So that's what we'll do on the next video. All right. So until then, peace.